CoreWeave stock, ticker symbol CRWV, one of the hottest IPOs of the year so far, reported earnings after the bell, and the stock is falling down 10% to nearly $15, and we are going to talk about why. Why is CoreWeave falling? What does this mean for the AI trade? And is CoreWeave a buy right now? But guys, before we dive in, if you could please go ahead, like and subscribe. It really helps me out. So for those of you that don't know, for those of you that have been living under a rock, CoreWeave is a cloud computing provider that specializes in providing high performance, GPU accelerated infrastructure for AI and machine learning workloads. They offer a cloud platform designed to handle the complex demands of AI development, training, and inference at scale. CoreWeave is often referred to as an AI hyperscaler due to its focus on providing computing power needs for large-scale AI applications. Now, CoreWeave is a very special business because they provide a bare metal serverless Kubernetes approach with no hypervisor layer. In other words, right, you get raw access to the absolute performance of the bare metal GPU and CPU and the server as a whole. There's no hypervisor layer. All they have is just a cybersecurity layer, and you can layer your own applications on top of that. It improves performance and efficiency, and CoreWeave has also solved the GPU startup delay issue, which I don't think any other provider has actually solved as well. And that's what makes CoreWeave so special. Now, CoreWeave's business model is very interesting, and not many people know this and how the business model actually operates. Now, CoreWeave operates on long-term contracts, typically lasting between 4 to 6 years with fixed pricing. When a customer signs a contract, they make an upfront prepayment. CoreWeave uses this prepayment along with additional financing to purchase GPUs and infrastructure. Once the hardware is delivered, there's an installation period of about 3 months. After that, CoreWeave begins delivering compute services and charging customers monthly. Revenue is recognized evenly over the life of the contract. Toward the end of the contract, customers' initial prepayment is applied as credit, and once the contract ends, CoreWeave can reuse the same GPUs for either a new multi-year contract or flexible on-demand usage by other customers. Importantly, all GPU financing is backed by the revenue from these signed contracts. So many people think CoreWeave shill up a lot of the capex up front, but actually a lot of the capex is actually prepaid by the vendor to get access to these GPUs. Now, CoreWeave have 33 data centers across Europe and the United States. They have 470 megawatts of active power, 2.2 gigawatts of contracted power, which should all come online over the next couple of years. And CoreWeave's earnings were actually really good. They beat on revenue estimates. They beat on earnings per share estimates, revenue growing 207%, and then earnings per share coming in at 27 cents in the negative. That beat the analyst expectation of 32 cents in the negative. So beats all around, a double beat here from CoreWeave, and gross margins actually improved. We'll talk about why that is the case. Net income margins also improved. However, you're looking at a negative 24% net income margin. The company reported negative $209 million loss, but that is a drastic improvement from last year, which was $323 million. And then adjusted EBITDA, which is the main metric they report at, and for them, it's the most important metric, that fell by 1% ever so slightly, but nominal dollars increased significantly from 250 to 753 million. So an all-around good quarter. And then the company has $2 billion in cash, $11 billion in total debt. So they are levered quite a bit, but they are growing like a weed. Revenue grew 207%, and they should maintain that growth rate for the next couple of years. Now, looking at some of the highlights or the quarter, very interesting stuff right here. Now, they had key customer wins across AI labs, hyperscalers, and enterprises, including a $4 billion expansion deal with OpenAI, in addition to the previously announced $11.9 billion deal they signed last quarter. So OpenAI and Microsoft is really looking to expand their partnership. They acquired a new hyperscaler customer. They don't tell us who that is specifically, but they signed and expanded in the quarter. AI labs and enterprises that signed with CoreWeave include BT Group, Cohere, Hippocratic AI, Hologen, LG CNS, Minstrel AI, Loon Valley, Novell, and Woven by Toyota. They are also the AI cloud computing partner for the Aston Martin Aramco Formula One team. And I think one of the most important things out of all of these highlights right here is that CoreWeave ended the quarter with approximately 470 megawatts of active power, and it increased the total contracted power by approximately 600 megawatts to 2.2 gigawatts. And this 2.2 gigawatts should come online to fulfill their revenue backlog, which now sits at $30.1 billion. This is essentially just future earnings for the company, and that has increased 86% on a year-over-year basis, where it was 16 billion just last year. And ultimately, this is the bull case for CoreWeave, right? As they bring more supply online, they literally have the backlog to fulfill that supply. So they know at the very minimum, you'll see revenue coming in. And then all it is just a margin story to get as much value to their shareholders as possible. Now, looking at the financials on a more granular fashion, revenue was up 206%. Very, very strong growth, going from just under 400 million to $1.2 billion. Now, cost of revenue increased 187%, right? And that is why gross margins actually increased. Now, the reason why adjusted EBITDA margins decreased is because the remaining operating expenses of the business grew 321%. And that was driven by tech infrastructure spend, sales and marketing spend, which increased a lot, and the general and administrative expense. So this is a company that's growing, and generally speaking, operating expenses increase a lot, and they can sort of like tame that a bit later on. But right now, CoreWeave is growth at any cost. Now, coupled with the fact that they have a lot of debt, interest expense increased 299%. And as a result, you actually saw a net income loss of 290 million, which narrowed by 10%, which is a good thing. That's why it's in green, as you can see right here, from the same quarter last year. So very, very solid stuff. Looking at guidance ahead, the company actually raised guidance. So what we got from CoreWeave was a double beat and raise. CoreWeave raised full year guidance to this area right here, 5.15 to 5.35 billion. And that was up from the 4.9 to 5.1 billion in the previous quarter. CapEx and operating income were kept exactly the same. And then for Q3, these are the figures right here. 1.26 to 1.3 billion in revenue, operating income of about 170 million at the midpoint, interest expense of about 170 million at the midpoint, and then capital expenditures of about $3.1 billion at the midpoint. So all in all, I thought this was actually a very solid and very strong quarter for CoreWeave, a double beat, a raise in guidance. They added a new hyperscaler. They increased their OpenAI partnership. They signed a plethora of new companies, which means they're diversifying their revenue base. And yes, their revenue is concentrated, but I think this was a really, really good quarter. And I think after the initial sell-off, I think CoreWeave is probably going to go retest those all-time highs on the back of this earnings right here. Now, if you want to buy into CoreWeave, ultimately you're playing the data infrastructure play. And the thesis is that US data center demand is forecast to grow about 10% every single year. AI demand is expected to grow at about a 25% clip. And CoreWeave is the best way to extract value from that market. Now, on an adjusted EBITDA basis, the company looks cheap, but I would take that with a grain of salt because they reported a net income loss. But on an adjusted EBITDA basis, next 12 months, they're trading at 9 times forward, which is pretty cheap if you ask me. However, look at the shareholder yield, negative 23%. But the best way to value CoreWeave is through something like this. Now, I'm using consensus expectations for revenue right here. Revenue growing from 3.1 all the way to 20. Coming slightly under consensus, and you're looking at about a compounded growth rate of about 30 to 40% through 2029. And then we're using EBIT margins to account for depreciation, because depreciation is a big expense for CoreWeave. And we're looking at a 30% EBIT margin by 2029. Again, roughly in line with consensus. And you're looking at EBIT income of 8.1 billion and an EV to EBITDA of 20 times. That would give you 162 billion enterprise value. Subtract the net debt, divide by shares outstanding, and you get a stock price in 2029, $250. Current price is 133, and you're looking at about 13.35% compounded annual return. And this includes 7% sequential share dilution for those 5 years. If the company can sort of like keep the dilution to a minimum, you're looking at material upside to these numbers right here. And I peg CoreWeave's fair value at 124. So if the company gets to this $124 area, that would be a great place to buy. However, the analysts see it a little bit differently. The average analyst has a consensus hold rating with an average price target of $92. Now, the stock just IPO'd about 3 or 4 months ago, so there's not much with regards to graphing or the technical charts, but ultimately I would look to buy CoreWeave right here at the $100 mark if it does get there, right? This is also where the volume shell ends. So this $105, $102, $100 mark for CoreWeave will probably find good support for us to go ahead and retake those all-time highs. But ultimately, I think you should see the stock bottom at around the $125 area. That's about right here for CoreWeave. That's probably where we'll bottom, and then we'll probably go ahead and have some price discovery at these highs. I think these earnings were really, really good, and I think we're just seeing a knee-jerk reaction in the after hours. I think 3 months ahead, CoreWeave will be higher than what the open price is at the market tomorrow. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment to the algorithm. Cheers.